Welcome. I am your host, Marconi White, and you're coming back to the Trading Pick because we had to restart the show. But as always, this is your home for sophisticated takes on the crypto markets. I'm super excited. It's April 11th, and here in the studio with JJ and Benjamin of J Labs. They're going to be breaking down the market structure as Bitcoin's just gotten crazy, shrugging off the hot CPI print, dollar charging rates nuking. It doesn't care. But is this a bull trap or a change in the regime? We're going to find out. But first, I got to re-ask them these rapid-fire questions because I want to hear what JJ has to say. Benjamin already got a preview of them, so he's already got his answers ready. That's too bad. But we all know that a second take on the show is twice as nice. JJ, I'm going to ask you the same question I just asked Benjamin. You ready for it?
I'm ready.
Okay. Bitcoin's bull run, beginning of the end or end of the beginning?
End of the beginning. I think we're just getting started here. So
okay. So that's 2 for 2. We got some people that think the bull run still has a ways to run. You think it runs all the way to 2025?
Yeah, I would say Q1 2025. I think that's a good target.
Way to speak from the hot seat. All right, Benjamin, you were already talking about this before, but you get to go back in time and build one of the 3, OpenSea, Ethena, or Cardano. Which one do you choose?
Cardano again.
Yeah, you're still choosing Cardano and
cash.
In the last 10 minutes, you didn't change your mind? Okay.
No.
All right, so you just want the cash, and we can see the greed in your eyes. All right. JJ, Who do you give your entire net worth to trade? Ansem or literally any U.S. congressperson?
Literally any U.S. congressperson, just because insider trading's undefeated. You can't go wrong.
Yeah, well, I was going to say, I mean, Ansem's got a good track record
He's
thus
on a
far.
hot streak. He's on a hot streak.
He's on a hot streak, but you really can't beat the U.S. Congress people.
Nope.
All right, Benjamin, hopefully you had a little bit more chance to think about this one. What's the biggest mistrade of all time?
It's still Solana. I missed out on entering in the last cycle early.
Oh, okay. When exactly? What was that entry point that you should have taken it? What was the price point for Solana?
I should have taken 3, but I entered somewhere around 50 or 60.
Oh, wow. Okay. So I think everyone has regrets. Hopefully they can chime in here on the chat on some of the things that they've missed, probably thinking about. All right. JJ, being in crypto, better or worse for meeting your mate?
Worse.
So you're saying if you want to find a mate, you got to get out of crypto?
Yeah, you got to get into the real world.
Okay, you got to touch some grass.
Yep.
Yeah, I have to imagine if you tell somebody at a party that you're into crypto, it's the easiest way to clear out the ladies. All right, Benjamin, last question here. Base or Solana, which wins the meme wars this cycle?
Solana wins the meme war in the cycle.
Okay. All right. Anything
But
more?
I think
What does
more
Base win,
productive-
if anything?
And I think more productive apps will be built on Base. There will be some meme coins on Base, but I can really see customer-facing apps being built on Base.
Oh, the juicy stuff, the stuff with some actual alpha. Okay. All right. Well, that could definitely signal a long-term trend for Base. All right. Well, let's get into some of these stories because we got a lot to unpack today. As I said, the price action on Bitcoin is interesting to say the least, given some of the news headlines. But we've got some other ones as well I want to cover before we do that. So the story of 2024 is all about liquidity, with Bitcoin ETFs seeing net inflows of $12.5 billion since January. Absolutely amazing. And now it seems Hong Kong wants in on the action. Per an article on CoinDesk, regulators are looking to approve spot Bitcoin ETFs for retail investors there, not just home offices. This sounds bullish, but the same article goes on to note flows will likely be just 2% of U.S. ETF flows. So, Benjamin, I want to ask you, how strong is real demand for Bitcoin in the East?
Well, East has been in Bitcoin for quite some time. Even before the West caught up, they had one of the best of miners until the migration in the last cycle happened from China. So they have already been in the game for a while. They have this degenerate policy when it comes to trading and investing. So I don't think it's that big of a shocker that they are going to approve the ETFs. And probably a bit of institutional money comes in, $1 billion or 2 or maybe even 3. But it's not that big of a bullish news as it is discussed out to be compared to what we had in Jan for the ETFs. Nevertheless, it's good spot supply accumulation, but it's It's not a huge surprise.
So this is a baby bull of a baby bull kind of signal. It
it's-
doesn't really give us much more
It's tiny.
to go up.
It's tiny significance. It's
All right.
not negligible, but it's tiny.
Okay. All right. So for all those who thought that this may just be the next catalyst for Q2, just hold on to your britches. Not a whole lot's going to happen. But now I want to talk a little bit about liquidity, and I want to talk a little bit about volatility, because on this show we've talked many times, and JJ and Ben and Benjamin have talked about the fact that we've had low volatility, and it seems like we're gearing up. I think in the words of JJ, we're coiled and ready. And a lot of that has to do with the yield products that are coming in the market. So I think it was just earlier this week, we were talking a little bit about Athena's yield product and what that may actually mean for the yield for Ethereum. Now, apparently there is another product coming on, but this time for Bitcoin. It's a liquid staking product for Bitcoin. Ooh. So it's according to this article on CoinDesk, you have Nomic, which will add Babylon to its decentralized non-custodian Bitcoin bridge to create stake BTC. And for those who are unfamiliar with Babylon, which will allow the stake BTC to mint stake BTC through a staking pool. And, without getting into all the details, I start to feel a little bit like the movie Margin Call to me. But JJ, what I really want to ask from you, rather than actually breaking down this specific product, I want to get a sense from you, what does this mean for volatility long-term if you see these kinds of products coming onto market?
If they start to gain traction, that could be a pretty powerful catalyst for price appreciation. So like in Q4 of 2020, I think that was the original yield chasing trade, was the GBTC, right? As everybody was piling into that trust, because it was basically a free yield product, and that you buy the trust, and then ultimately people were shorting it. We know how that all turned out in the long run as BlockFi and whatnot went under. So I think it could be a positive impact on price here, and it could lead to some kind of parabolic gains as people start to seek yield and chase it, and ultimately that translates to spot buying volume. So could be a good thing if it catches on, but long term, who knows? It's those products are a black box.
Yeah, so I want to get to that next part and unpack that a little bit. So it could really be explosive growth for a period of time. What's the hangover like, though, if they get this wrong?
Yeah, we never learn. So always cautious when you start hearing products like that be floated around. But in the near term, if it kind of leads to some wild price appreciation, just go with it, ride the wave, but know how it ends. If you live through 2022, you know how it ends. So yeah.
Okay. All right. So definitely something to keep an eye on. Let me ask you last final question before we actually get in the market update. Would you be looking to gain some yield through a product like this, or is it a little too risky beyond your palate?
No, that's not really my style. I'm not too into kind of the yield seeking stuff, but there are people that are very good at it. You can make a lot of money doing so.
Okay. All right. So it's not necessarily a negative that you wouldn't necessarily touch. It's just not really where you're putting your mental energy, so to speak.
Exactly. I don't even know how this works, so it might be a great product. I'm just cautious when I see those things floated around.
Well, yeah, I mean, you have to be some PhD in rocket science to read through some of the documents, and especially if you start to look through all the bridging. I think I saw a great meme online. It showed salmon swimming upstream, and they said this is what a bridge actually looks like. I thought, yeah, that sounds about right.
Yep, that's it.
Well, okay, let's actually get into the market update. Before I do, I want to thank everyone for joining us again. For apparently the first time we went live, we probably had the CIA or someone listening to us and saying we didn't want to give out all this alpha, so they broke up our mics and destroyed our live stream. But we are back. This is round number 2 for today. Glad to see Adrian and JB are back. Good morning. Good morning. Welcome. Welcome. And for all those other people out there watching the live stream, definitely hit the like and subscribe button. We're glad you're here. I'm glad you came back. We hope to honor that your time with some good alpha. So let's go ahead and break it down. JJ, I mentioned at the top of the show, we had some very interesting activity with the CPI print coming out hot. It was higher than expectations, meaningfully so, but not, something that's absolutely going to crush the market. Same time, we see the dollar up. It's over at 105.29. Oil, I think it's still about steady. I'm mentioning all that because we were looking for those signals to try and signal a pullback. Instead, I looked this morning. We had the ETFs come in with positive inflows at 123 million. GBTC saw some of its lowest outflows from an ETF at just negative 17 million. I look at spot. Bitcoin's holding it at 70,000. Ethereum up at 3,500. Solana's pulled back a little bit. Maybe the memes are getting a little tired. And then, of course, there's a lot to unpack from a perp and options perspective. Tell me, are we starting to see a shift in maybe it's beyond narratives and actually regime change, or is this a bull trap?
That's a great question. I've been trying to figure it out myself, as I'm not too sure at the moment. So basically what we had happen is on that first move up to 70K on Monday is we had a ton of short interest enter. Obviously, Bitcoin broke down a bit into CPI, but it ultimately ended up making a higher low. And now those shorts are kind of feeling some pain. So the other day I tweeted out some liquidation pools that were resting at those levels. You could see them above 70K. Let me just pull up the chart here. So you can see there was just a ton of short liquidity that had entered basically over the course of Monday, and a whole lot of liquidity pools up above 70. So now those are feeling some pressure, and whether or not we get a larger move, we'll have to see. It's going to be a pretty pivotal weekly close here, I think. See if Bitcoin can continue this momentum despite the move from DXY, right? And typically you see this inverse correlation between the two. When DXY makes his move as strong as it did yesterday, you typically see BTC sell off, but it seems like the market shrugged it off, at least for now. So we'll have to see if this can continue, and it could possibly be a regime change, as you pointed out, and we could be entering an era where both go up together. I'd have to see it to believe it, as I'm still cautious anytime I see this kind of movement from DXY, which is typically not what you want to see, but the dynamics of the market can always change. So keeping an open mind to it, but also being cautious until we see some real follow through, hopefully today during the US session.
Well, I was going to say, what is the delay? Like, at what point do you say, okay, this is starting to see a regime change? Is it on a monthly close? Is it after a whole quarter of this happening? What would it take to convince you that the regime has actually changed?
I think if we see a Bitcoin breakout to new all-time highs, while DXY is still, above 104 or so, even if DXY falls back to here, if Bitcoin's still charging hot, I think that's something you should take note of. Obviously still cautious though, like until you see that, that's the DXY moving the way it is definitely a red flag for markets.
Yeah, absolutely. Okay, so we don't have anything conclusive yet. We got to hit that all-time high, see that volume come in. What about, I mentioned about the perpetuals. There's a lot here I still want to unpack, because this behavior is very odd, right? We were all talking about this on Tuesday about looking at the CPI print. It came in a little bit hot. There's some good analysis online. I'm not sure we're going to get into all that today about what's actually driving that. But I saw that, I think from a perpetuals perspective, you saw a good washout. When I was looking at this morning, I think when we talked about on Tuesday, the shorts and the longs, they consolidate a little bit. I think it was 55-45 roughly. Now it seems like more of the shorts have been taken out. When I was looking this morning, a good amount of liquidation on the short side. Are you seeing anything from a perpetuals perspective that's saying where the perpetuals are starting to gear up and maybe give a signal of where the market may go next?
Nothing too that's jumping out. It's kind of neutral right now. Seen some increased open interest over the past day or so after kind of the washout. Now, if we look at these liquidity pools, it could basically go either way, in that you have a whole lot of liquidity down near below 70 or 67K. And you also have liquidity up above the all-time highs. So it's going to be pivotal to see which kind of direction price chooses to float in, as it's kind of equally weighted, it seems, right now.
Okay. And then I have to ask, obviously, about the options market. I also want to ask you a little bit about whale accumulation, if that's continuing, because we talked a little bit about the ETF volume continue to go up. It feels as though it's slowing down. Some of that momentum's down. Benjamin mentioned he thought this would be a slower quarter for that accumulation. But I guess from an options perspective, are you seeing, last Tuesday when we talked about that, we said that basically the market is broken, really trying to position for upside and downside protection. Any shift yet in the options market to try and signal after the what came out on inflation? Is there any new signaling of the market kind of changing that belief?
We've seen a lot of put flows into April contracts recently. So basically since April 8th, on the April 12th expiry, which is this Friday, we've seen about 2,000 puts or so added in the past couple of days. Then you go to April 19th. Since April 9th, it looks like about 1,000 or so puts have been added to this expiry date. And then the 26th, since April 8th, we're up about 1,000 puts on that. So it's mostly put flows. Looks like people looking for protection in this region, just in case, DXY does what it does and takes the markets down. So it seems like people are hedging themselves here. There's not really a firm directional bias coming from the options market currently. There's a lot of open interest around 70K through the end of this month in terms of calls. So people are still geared for that upside, and it just looks like they're protecting that now in the form of puts in case we do get a fall lower.
So, okay, so we're still seeing the same kind of shell movement, snail movement, where people are they're hedging both sides. They don't really have a bias on which way this is going to break. No one's really taking kind of those outsized trades to really say, I think it's going to go long or short. It's time to stack in, ape in.
I think everybody's as confused as we are looking at the structure right now, trying to figure out what happens next.
Yeah, well, maybe sometimes it's good just to be sitting back. Last question, though, I want to ask: what about the whales? Are they continuing to accumulate, and what is that telling you?
Yeah, we saw some interesting flows. Benjamin could probably pull this up on the pen terminal there, but we've seen on the divergence chart just basically since the end of March, continued accumulation from whale wallets. So we see that in the orange and red lines here, and that they've been continuing to add to their supply of Bitcoin recently. And then Ben had a nice tweet this morning showing the CVDs of whales, and I'll let Benjamin unpack this one a bit more.
Hold on. Producers, do we have the right chart up? I'm looking at a price signal. I'm not sure that's the right thing. We got the right ones?
I was on the wrong screen. Sorry about that.
Okay. I keep on blaming the producers. Instead, I'm going to blame the analysts.
So here's that divergence chart.
Here we go. There's a divergence. Now bring it up. All right, JJ, unpack it.
So you see on the yellow and red lines here, basically since the end of March, whale wallets have been adding to their supply of Bitcoin holdings. And then Ben had a nice tweet regarding the CVDs that we were seeing on spot and futures. And I think Benjamin has that screen up, so I'll let him unpack that one a bit more.
Okay. So an interesting divergence. So Benjamin, I want you to come in here and kind of break that down, what we're seeing from a divergence standpoint, and what that may tell us about what we might see in Q2, especially as we go into the halving. It's just, I think, 10 days away.
Benjamin,
are you with us? Are you with us? You look serious. You sound serious. I want you to be here, present.
Looking at the price action as well. So, spot has been holding up quite well. Not so bad, I would say, but there's still a lot of confusion and chaos. There's a bit of divergence between the flows in spot side and future side. One of them looks strong and the other still looks a little weak. There's certainly a lot of shorts coming in whenever there is a downside price action, and this leads to a squeeze up. But today I saw quite some long liquidations on the dip down below 71K. Like we were testing 71K, and then when we had that quick dump, there were quite a few liquidations. So it is getting quite interesting that in this small time frame, people are gambling quite a lot, risking quite a lot. Yeah, we have to see how that plays out.
I want to get
ideally not the best location to play.
Yeah. Okay. Well, I do want to get specifically into this divergence that we were just talking about. There was a question here. Can divergence chart be distorted historically because of ETFs? Are the ETF flows going to make that signal that we're getting from the divergence chart less?
It doesn't matter whether it is ETF flows or anything. It's basically buying and selling. It's spot volume. At the end, it does reflect on the order book. If it was purchased on the order book, if it was done on chain between two whales, then it's a different story. But if it was a purchase out of the order book, then by all means you have a chance to read it.
Okay, producers, can we bring up the Panda terminal? I think this chart, because I don't think we brought this up. Benjamin, can you explain this though for the audience? Some I'm sure have seen this. Maybe we've covered it before, but maybe for those who haven't seen this before, what are we looking at here exactly?
So we're looking at CVD with multiple tiers. So basically, there is a tier which is for trades that has happened in the size range between 0 and 10K, and then you have the 10K to 1 million as another tier, and then 1 million to 10 million as another tier. And what we observe basically over here, the ones that we care more about is the blue whales. And we can see that after the uptrend they had in the early April, it's been a bit of a flatline, slow, sideways type of a pattern that they've been observing. So it's not much of whale buying or mega whale buying that has been happening. Certainly there has been some smaller traders coming in and going out time to time. But when it comes to mega whales, they are taking a step back and just letting things play out to see if they get a dip back that they can buy into. They haven't sold in large sizes. They're just still holding and watching.
So a little bit like us. I'm sure some of the listeners are thinking that's what they get every time they tune in here. What about so if you look at this data historically, do you have anything that would give you, and I'm not sure if you can pull it up now, how they positioned prior to the previous halving? Was this sort of a calm before the storm going into the previous halving?
The previous halving is hard to do because Binance USDT market, USDT futures market was quite new. So compared to an ETF, right, distorting flows or making it difficult for traders to understand, I would rather say when the USDT futures came in, it became a whole different market. That is why when I talk to anyone, I don't talk about the pre-Binance USDT markets era. The BitMEX era doesn't matter anymore. Like it doesn't not matter anymore. The liquidation models there doesn't matter anymore. So whatever you saw before 2020 DeFi 1.0 season, that flows do not matter anymore. So comparing the data, studying the data has not much use for on a daily level trading when it comes to order flow traders anymore. My perspective is that right now the only best reference we have with respect to previous halving on the spot side, like you can look at what Bitfinex flows are doing a little bit, but it's hard to really say that that's how it would behave this time. Ideally speaking, after the USDT futures market came in, this is the first real halving that we are looking at. And this is actually, we have more, inverse futures and linear futures products. We have a lot more on-chain futures products, derivative products now in this ecosystem than any other cycle involved. So it's hard to say that we can compare it to the previous cycle's pattern at all. There's a lot of paper contracts available in this cycle to trade. So it's going to be a very fascinating situation this time.
Okay, so so just to summarize what you're saying here, we can look at the history, but it's not really going to be that informative. The market structure has changed enough that what we need to be looking at right now is sort of existing flows. And this will be the first time, maybe this particular halving will be more instructive for future halvings as the market's changed.
Yeah.
Okay. All right.
That's
so
what I think, yes.
Hopefully that gives some insight. JJ is stuck on Joker, really thinking about what you just said. Maybe he's going to make a comeback or bring something in. I do want to ask a question. We had a question in from the chat from KS. Can you guys see liquidity being removed from the crypto market at all? I noted two big traders mentioned this as a potential in April due to tax season. Arthur Hayes being one of the traders.
I think that selling probably already passed. I think the deadline's coming up on Monday for the US. So you could, I mean, it's hard to attribute that. I think usually people have that money set aside, hope hope before April. But there's that seasonality of it. So maybe that was some of the weakness we've seen in the past couple of weeks. But if it is, I think that forced selling is behind us for tax purposes.
Okay. Yeah.
Liquidity wise though, I think DXY would be your signal there. Like it keeps getting stronger. You could see Bitcoin lose liquidity really quick if broader market sell off.
Okay, so I want to summarize this here because we've broken out a lot of information. Again, for the listeners, I'm imagining some of this feels like, haven't we talked about this before? A little deja vu. But the market's doing something strange. We're going to talk a little bit about the Dixie and rates in a moment, but Dixie's gone up based on the CPI print. It's looking stronger, but BTC is holding strong. But some of the metrics say that the market is really hedged for either a breakup or a breakdown as we look at the options market, and perpetuals aren't really giving us any signal either. So at this point, and we're going to get into trades in a little bit, it appears that this may be an interesting time to be getting into trades and definitely not the time to ape. I'm going to ask these guys about specific trades, and Benjamin has something very interesting I want to ask him about. He talked about offline in a conversation we had beforehand. But before we do that, we're going to talk a little bit about macro, some of these outside forces that could potentially create some havoc in the markets. I want to thank everyone for rejoining us on what was our second attempt today. Definitely some challenges on the production side. No issue with our producer; he's top notch. But I don't know what happens. I won't even go into what exactly happened there. But anyways, welcome. Definitely hit the like and subscribe button. Share this with whomever is looking for a sophisticated take on the market with less shilling, just more analysis. And if you're interested in getting ready for options, JJ is going to be talking a little bit more about that, I'm sure, later in the show. And he has his options videos. Definitely check out the link in the description for CoinCall. CoinCall is a great exchange with an elegant interface, competitive fees to do options, perps, and spot of all the majors. It's the exchange that JJ uses as the examples in his videos. And of course, we use them as a reference exchange for all of our for everything that we end up showing on this show. But if you're definitely interested in getting ready for some of those options trades that are going to be happening certainly later this year, maybe even starting as early as this month, definitely hit that link in the description and get that started. But with that, I want to get in a little bit to these outside forces. So JJ, we talked, I mean, I've already gone over some of the numbers. We've already talked about Dixie. How surprised were you to see BTC and Dixie going up at the same time?
It wasn't totally shocking, right? Because we made that higher low, and then there was so much short liquidity that we were kind of expecting like this bounce back squeeze at least. And now this is what I see, kind of the weekly close. I think this is going to be pretty pivotal. Like, does BTC end up taking out the weekly lows, going back to the April lows from a couple weeks ago, or does it continue to break up from here? But it does feel like kind of the moment of truth is coming a bit. In terms of Dixie, there were some interesting dynamics that played into that yesterday. We were talking about this in our chat yesterday, is that you had a huge trader that was betting on the interest rates futures. So they were basically buying these. And when these go up, it indicates that rates will be falling lower by December. So they made a huge bet that rates would be going lower into the CPI print. And then they got squeezed to the tune of, I think they're down a couple $1 billion right now or something in that neighborhood. So they basically bought these futures at 95.32 was the entry price. It's basically at the top on Tuesday prior to the CPI print. And then as the CPI came in hot, the market reacted. They were just on the wrong side of this trade all the way down. And that obviously led to DXY going higher. So when interest rates are indicated to rise, as they do when this chart falls, DXY moves higher as the market expects higher rates. So what we're trying to figure out now is, like, was that just a short squeeze? Are these rates going to reverse in the coming weeks? We've had some turbulence in the treasury market yesterday. There was some force that DXY puts on markets that isn't too good when it runs this hot. So are they going to react proactively and kind of get ahead of this, or are they going to let market self-destruct and let DXY go to, the 2022 highs of 115 and just wreak havoc on markets? So that's what I'm keeping an eye on, is specifically these December interest rates futures, to see how they react now that we've had that large short squeeze yesterday, or long squeeze, and see if that ends up pulling DXY back down with it, in which case I think that would be the green light for Bitcoin to go ahead and make a run towards those highs.
How much pressure, if the dollar continues to stay strong and elevated, and you don't see Bitcoin really move higher from here, how long do you think it can sustain this range at an elevated dollar? Through the quarter, through 2 quarters?
I don't think it makes it through early May. I think if DXY keeps running hot and we don't see that breakout from Bitcoin, I think we're headed back to below 60 in May for sure. Okay.
So that's definitely one scenario.
I also subscribe to sell in May and go away.
Mm-hmm. Where are you going there, Aruba? Where? All right. So how long are you leaving for, Benjamin? How long are you gonna take off for? All of summer?
24 hours.
Yeah, you talk about a mini break. Talk about a mini break. Okay, so walk
that's
us
all
through
I
that.
can take holidays for.
Yeah.
But okay, in all seriousness, I think Bitcoin, when you look at it on a price structure level, it's fantastic, right? I mean, it's consolidating at the previous all-time highs, and it's tough to be bearish or it's fantastic. But the problem is that we've been seeing a degradation in flows everywhere, literally everywhere, right? And on top of which, we have still these macro headwinds, which are not so clear about. And we still have another 6 months or so for the election. So if we have all the fun now, what are you going to do when it gets closer to the election, right? And it's typically not much happens in Q2 and Q3 when you have a spectacular Q1. And even in last cycle halving, if you look at it, after the halving was over, you had pretty much of a slowdown period. Yeah, sure, price went up from 9K to 12K and then basically came back down to 9K. And then the slow grind started in the towards the end of Q2, sorry, towards the end of Q3. And then it kept running up. Elections came in and, the same story happened last time. There's no reason something different needs to happen this time. And the flows, basically, this is all cyclical. When you look at the liquidity, when you look at markets, and I do believe this market needs to cool off a little, consolidate, and this 1.5 months of consolidation is not enough. And we see this behavior also repeating every Monday, wherein either the high of the week is made on Monday or low of the week is made on Monday, right? And then there is a consolidation in the Monday range for the entire week. And then there is an impulse, and then it keeps continuing for the rest of the week. So that's why you're seeing this constant sideways pattern right from the beginning of March. Sure, it's still higher lows and lower highs forming a triangle pattern. But what stops from a small fake out happening all the way to 76K and then dropping down to 60K or maybe even 52K or 55K? And it can still be a healthy correction. And then keep grinding slowly all the way up, the same way what we did in 2020 consolidation in Q3 and Q4. That would be perfect.
So in that scenario, you see, let's say, a drop back. And again, these would all have to be updated as we actually see the market change. But you'd see a pullback, maybe 76, goes down to 50, 55K. Then we see this slow grind up to maybe all the way at 100K. And then from there, maybe a blow off top.
Yeah, potentially. Like we could go up to 100K and then everybody and their grandmother wants to buy it. Probably a lot of RIAs are, pumping in cash at that point. We probably by then have already 1 or 2 rate cuts, potentially. DXY starts to cool off a little, and then we'll see where it goes from there on. But we still haven't seen the actual AltSeason, right? I mean, this is all catching up to the previous cycle's market caps. And there's a lot more narratives coming in. And once the rate cut starts to happen and then liquidity starts to improve and flows start to come in, probably we are going to see this as a split cycle, in my opinion. Like we probably hit one top in early next year. Like what JJ said, early Q1, we hit one top and then we get another round of consolidation and we do another cycle top probably early 2026. Because if the market is moving up this well and there's liquidity coming in, even before rate cuts happen, then, after the rate cut happen, you are going to have another shot at everything, right? Because there'll be more liquidity coming into the VC flows, family offices, a lot of lending markets. And that's probably going to be the actual boom that comes in. And yeah, it's probable that we see a split bull market instead of a full-blown bull and then a bear and then a bull. We see a split bull market.
A split bull market. It's a terrifying visual in my head. But actually, what I do want to point out, that the rich alpha you just gave is that people right now could be booking their Airbnbs for their summertime at the lowest rates possible because they know that they're going to sell in May and go away for all of summer, hopefully somewhere fun. So with that, though, we're going to have to see what actually happens with the markets if we end up seeing that nuke down, if we see the consolidation. So I think you're painting out, though, a picture. This consolidation could happen for an extended period of time, and we're just going to have to monitor that. And JJ, as you said, if the Dixie stays high for a longer period, expect to see BTC finally drop. It's going to have to relent against the pressure of the Dixie, unless, in fact, we're actually in a regime change, which you're not convinced of. I don't think anybody is yet convinced that that's the case. I want to take this moment to pivot, though, a little bit about positioning, because I think there's a lot of questions on people's minds. I know I've had them all over CT, which is when is the time to be deploying some of this capital if I've got some on the sidelines, or is it time to be taking some profits off? We've talked several times on this show about whether or not This is the local cycle top. We in fact, just on Tuesday, we talked about some commentators mentioning that. We say, no, this is the beginning of the end. This is the beginning, or sorry, it's the end of the beginning, rather, for where we are in the cycle. But there's some interesting points around that, right? So one of them is that we haven't really had a true alt season. Benjamin, you were just commenting on that. And it's also possible that we have sell in May and go away and be able to come back in the fall and really kind of rejoin this trade. So Benjamin, I want you to kind of talk a little bit about what we were talking about offline before the show about the challenge with this altcoin cycle, because it doesn't seem to be, it's definitely not what we experienced in 2021, where we saw DeFi kind of raise the rising tide lift all boats. It feels as though we've seen some pumps in AI. We've seen obviously memes. We'll take that off the table. But beyond that, I mean, finding these altcoin gems has been a little bit difficult. And I think you're chalking that up to the tooling being different and the market structure being different. Can you unpack that a bit?
So I always reference back the altcoin cycle to what was happening back in the day with DeFi. That was the true on-chain cycle we ever had, because prior to what happened in DeFi 1.0 in 2020 April till when Bitcoin was consolidating at that point, that was the first cycle when Chainlink became a superpower. It was doing fantastically well, and so many people were integrating Chainlink, and there's so many protocols, Uniswap, and all these protocols were basically coming in. PancakeSwap came in, and BSC came in. A lot of new tech, or let's say at least visibility to a lot of the new tech was coming in. And at that point, there were a lot of new whales who came in, and they were able to identify such projects and capture early access to them. And we had also our friends from Ansem come up at that point. And at that point, it was helpful to track a lot of these on-chain wallets and copy trade them, or understand why they were doing that, understand they were going and staking all of these things. It was very advantageous. And a lot of money could be made just by copying those guys and trying to invest into a lot of those projects that they were getting into, because understanding what those projects were doing at that point was not possible for everyone. Like, for example, I was a little late to DeFi 1.0 in last cycle. The same way, there were a lot of people who never touched DeFi 1.0 for quite some time until they were late in the cycle. And that's when Luna came and everybody lost money. So the season where anything that basically lists or anything that basically folks comes up was still running, I don't think that is happening in this cycle yet. So if you take AI, if you take, for example, L2s, like you can see 100 L2s, you can see 100 DEXs, you can see, a lot of copycats or anything that comes in. The previous cycle where basically, even if it was a fork, even if people knew it, just because there were certain whales buying it, people were just pumping in money. That same behavior is not happening this time. There's a lot of choosiness in projects. Well, people are looking at floats. There's a lot of choosiness even inside cycles, even inside the rotation cycles. There's a lot of choosiness. A few projects are what are pumping, and most others are not. There's a lot of pile up into the same ones rather than trying to find the next lagging token.
So Benjamin, I want to break in here a little bit, because I think
sure.
that paints a nice picture for what, doing contrast between this cycle and the previous cycle. One thing that really comes to mind is that Ethereum and the BTC that levy hasn't broken yet. So JJ, I want to ask you a question about that. So we've talked several times on this show about looking for the Ethereum break to finally happen, and your signal is really trying to see if the volume profile has kicked in, and we see the ETH BTC chart paint with the volume where people finally relent, they get out of that trade. So do you think that, based on what Benjamin's saying, doing that comparison, that once that happens, we're going to see something that would be more akin to a 2021 alt cycle?
Yeah, I think that's possible. Like, looking at the chart now, I still don't see any signs of a definitive bottom being in it. Doesn't mean it can't run in the next couple of weeks or so, but you still haven't seen that volume that you'd really want to see here to signify that people have sold their Bitcoin into ETH. So still waiting for that. I think it could possibly consolidate lower, and then ultimately we'll look for those signals. Like, you'll see that the signs of adoption and people using it in different ways, similar to summer of 2020 when DeFi really started to kick on. Like if you look at this and compare it to summer 2020, we're down here, right? And then in May or so, it started to get some momentum, right? You kind of saw this slow climb up. I would expect something similar this time. So you'd probably see a bottom beforehand. Then as people start to migrate to ETH and use base and whatnot, you'll see it in the volumes here. People will start to rotate and start to apply it.
Okay, so Benjamin, I want to come back to you. Do you agree with that assessment that if we see the ETH BTC pair finally break, we see the volumes come in, that's the reset, that's the point in which we may actually start to see an alt season?
Yes, I agree with JJ what he's saying. See, look, how much ever we may hate Ethereum, it has still been the financial layer, right? And it's so hard to do any on-chain analytics when it comes to Solana. To deploy a node, to run it, to process it, store it, it's impossible work. It's huge. It's extremely expensive. In December, 5,000 SPL tokens were launched on Solana. How do you expect anyone to be able to keep track of it? It's bullshit, right? But what is happening also in Solana is that, which we have to accept, we are seeing it live, is that there's a lot of meme coin projects building up. There's a lot of small utility projects that may make sense or also building up. I'm not going to completely deny that at all. But I think the real competition in this cycle is still base, because base, with Coinbase help and the smart wallets and all that, when it is going to reduce the complexity for a user to come into crypto, if like Base is basically saying, Coinbase is saying, if you use our wallet and if you're using Base, then there's going to be no transaction fees for a while. That's fantastic. That's huge. Like, I keep thinking, like, we pay salaries in USDC for our employees, and I'm using main chain, and for every of these swaps, sometimes I'm doing $30, $40 of transaction fees. That's a lot, while I could just do it for like a few cents with Base. So a lot of flow will start moving to Base, and that is going to be a huge boom. We have not seen that yet. It's still doing like what, 135 million volumes so far. Sorry, in revenue so far. Wait for it to go up to 1 or 2 billion this year. That's not happened yet. The tooling for that is coming. Coinbase is not going to be on sidelines just letting it not do anything. It's a new way for them to pump up the profits in their book like no other company in this world has.
Well, and you've mentioned that before on this show, that the dirty little secret of Coinbase, that this is a whole new revenue stream that they're going to be pumping pretty hard. Does that require the Ethereum BTC chart to break, or can that happen independently? I guess my question there, just to add to that, there's a psychology element to this for all the retail side of it that's saying, okay, when is the time? If they're waiting on the sidelines, they're looking for that ETH BTC to break to say, okay, now we can have that altcoin season.
See, there are two elements to this. One, yes, base moving up, base activity moving up like crazy. Like imagine seeing a December type of season that you saw in Solana happen in base. Then you can see a lot of flow come back into Ethereum, right? But now the conversation is going to be about Solana ETH and not about ETH BTC. ETH BTC conversation always comes in when BTC decides to cool off and when there is a solid rotation that happens from BTC. The problem right now is that with halving going on, and there is typically standard models dictates that once halving is over, you still have a bull run on BTC left, right? This is a cyclical approach. So with that in mind, ETH BTC continues to consolidate. It's trying to not break its floor and dump down. That's why you're not seeing a volume flow come back into it, right? Which is also why I still think all the flows that we see on the USD level with respect to altcoins, all this altcoin market cap rise, even though it's new meme coins and all that keeps coming in, it's all because of the strength in BTC. It's nothing to do with altcoins themselves, and the massive upside to more altcoins that will come when ETH BTC is ready, and when Solana ETH starts to bleed. That is when the real alt cycle, in my opinion, will come. Like, for example, what is total 3 right now? I think it's somewhere around 726 billion. Yeah, that's total 3 right now. This involves all the meme coin crap that we've been seeing. There's no reason this shouldn't become, 5x, because that's typically what happens in a altcoin bull run.
Altcoin.
So, in the last cycle, we saw it lower. Yes.
Yeah, so I want to cap this conversation on the narrative because I want to get into some actual positions. I think JJ is kind of gearing up to want to talk options. So just to summarize here, though, yeah, we haven't seen the capitulation for ETH BTC. We may have a sell in May and go away month for the summer, and once we start to see that, we can see an actual AltSeason, the break of the ETH BTC. We can see that, and maybe you're saying the ETH sold chart. We can see those break, then we can have an actual AltSeason, and definitely to keep an eye on base is what you're pointing out, Benjamin. And again, at some point, your avatar is probably going to have a tattoo, maybe right across the head. Maybe it's going to have something related to Brian Armstrong's cat. We'll have to see. But I want to get into specific positions right now and ask you guys specific questions about positions. So JJ, I want to talk a little bit about options. Before we do that, though, I want to tell everyone, if you haven't already, definitely check out the link in the description for CoinCall. It's the exchange that JJ is going to be looking at as he's looking at some of these options trades. And it's a great place with an elegant interface, competitive fees to do your options journey. If you're interested in doing any of the trades that JJ talks about in his educational videos, definitely CoinCall is the place to start, because you can definitely align that and see exactly what he's seeing as he's going through in those videos and start to think about the straddles, the different, looking at the options chain, really get a better sense of how the mechanic actually works, and actually start doing some paper trades or some real trades, perhaps with some cheaper options, so you can get more familiar with it, prepared for the opportunities that are going to be happening, as we just talked about, maybe early part of Q1 of 2025, or even later in the cycle if this gets extended. Definitely a time to do that. So JJ, I want to ask the question, as I do every single time, if you're looking at the options chain right now, is this a good time to be entering some trades, and what are you looking at specifically?
I think it is, and I still favor volatility from this range just because of how long we've been consolidating at the 50 RSI mark here on the daily. So let me pull that up. You see we've been consolidating here since basically March 17th. We had that big drop down after the all-time highs, and then prices just been kind of chopping in this range back and forth. So I think inevitably before May, we're going to see kind of a range break here. Either this 50 RSI is going to give, and we're going to see the bottom fall out, or it's going to bounce. And I put up a post yesterday just showing in 2020, 2021, how strong the bounces from this 50 RSI mark were. So it kind of led to Bitcoin's largest gains throughout the cycle. So 2020 took us from 17,000 or so up to 42,000, and then again from 30,000 up to 58,000, and then from the low 40s up to the new all-time high above 60,000. So historically, this is a pretty good spot to place bets on volatility. I think you could play both directions, especially in the past few weeks. We've seen a lot of volatility sucked out of the market. So those options contracts aren't too pricey either. So let me pull up a couple of those here. So if you look at something like April 19th, anywhere in April for puts, and I think you could go probably 65,000 or below, just playing for that range break to the downside. These aren't too pricey. And then obviously if DXY does what it does, takes liquidity out of markets, Bitcoin falls to 50K before the monthly close, you'll be in pretty steep profits if you're holding one of these. And then for calls, I like June. You could play May as well. And you probably want to go somewhere 70,000 to 75,000 and really capture that full upside if it manifests. And you have a pretty tight stop loss here as well. Like you could basically use the lows of yesterday, if not that 65,000 level. And that's where, you know, price probably isn't going to move up to new all-time highs if we fall below there for very long. So you could just keep a tight eye on it over the course of the next week or so and see how this plays out. But I think it's shaping up for some volatility in the coming weeks.
So definitely a good time to be playing volatility. Do you see these trades going away in the summertime? Are you going to have to take a long extended break?
Yeah,
between June and August?
It's a TradFi market, and TradFi takes the summer off, so that's probably just going to be a very low volatility period, most likely.
All right, we'll be following your IG handle. We'll be seeing you sipping Mai Tais on some beach somewhere.
Hopefully.
Okay, all right. So definitely some options, literally to play right now that could give you some good upside, give you some more dry powder to take into the summertime and definitely into the fall period where there could be some good trading opportunities. Benjamin, I now want to come to you. You were telling me offline you got a potential 5x opportunity, which we don't unleash very often. Walk us through what you're looking at. Or don't, if you want to be secretive and furtive.
Let me the stupid sharing option.
And while you're pulling that up, I did see a funny comment here from G-Man. If Robinhood and Solana had a one-night stand, I expect base to pop out 9 months later. Good call, G-Man. I like that reference point. We definitely have some other good discussion from some of the other people in the chat. Run the Jewels talking about some of the liquidity. Mentioning, I don't think all the wirehouses in the U.S. have approved Bitcoin ETFs on their platforms. Run the Jewels. That is my understanding as well. And definitely, I think we saw that and we talked about that even on Tuesday about some of those being added. But it's a slow process and definitely not. It's not happening overnight or even in one quarter. So Benjamin, coming back to this trade, what is this trade option that you're talking about?
So I started buying this token called Mubi. It's basically a bridge in the Bitcoin ecosystem. What happens is, using that bridge, you can transfer BRC tokens, BRC20 tokens, to the EVM chains. So imagine it's like a wormhole bridge, but instead for EVM and other chains, over here it's for Bitcoin and the EVM chains. They've been doing some quite good work here, and I've been tracking the order flows on this token chart, and it's starting to break, and it's starting to get a lot of accumulation when I look at the lower time frame bid depth delta as well. So I think it's just going to pop up. It's a new token as well, and there's a very good scope that it basically goes beyond this quarter's all-time high, and hits somewhere, let's say, to $1 all the way up, because it's a low FDV. It's a small market cap. There's a very good potential, and also it's a good product. I've tested it out, and it's nice.
So,
Um,
sorry, wait.
yeah,
So I just want to make sure I understand.
reason.
So this is a
And I also
bridge.
hear it's going to get, yeah.
So this is a bridge to
Yeah.
take. Did you say BRC? Wait, sorry. Can you just repeat
Yeah,
that? Because
BRC.
I know nothing about this token, so definitely I just want to make sure I understand exactly what the product
Okay,
is that it's supporting.
So just to give a brief intro, just like how we have ERC20, there is something called BRC20. It's basically tokens that are getting built on top of the Bitcoin ecosystem, allegedly. And just like how you have inscriptions, ordinals, the ordinals token, which is basically a BRC20. We saw a mini BRC20 cycle, an ordinal cycle in the last 6 months, I would say. A lot of Asian buying happened. And what was missing, or what is still missing in the Bitcoin ecosystem, is a lot of infrastructure for this, a way to properly trade BRC20 tokens. Like, you have good DEXs and EVMs, right? So you still don't have a good DEX or a good L2 or a good multi-chain bridge when it comes to Bitcoin ecosystem. And given the fact that there is acceptance, there is demand, there is a lot of trading volume coming into these tokens, there is now demand to wrap it up and have it in the EVM side, so that people who are natively available only in EVM are also able to get access to these BRC20 tokens. Okay, like a wrapped version of Bitcoin, which is available as WBTC in the BTC in the ETH ecosystem, right? You have WBTC, you have WETH, you have W whatever, and all of those available as wrapped models. So a lot of these infrastructure projects are now starting to pop up in Bitcoin ecosystem. This is one of them. It works as a bridge. It's an exchange. It's a bridge. You can call it whatever you want, and it's doing some good job. And based on what is also happening in the order flow side, I don't have a order flow metric chart for this. I wish I could have finished last night, but I was tied up on something else. But it's been doing some good accumulation, and I expect it to pop very soon. And when it does, it's probably just going to head up to $1.
Okay. So you've given a price. So none of this is financial advice, but you've definitely given some strong observations. So just to really kind of hone in there, you've got the craze of NFTs that's been building, I would say, as you said, in the last 6 months on Bitcoin, but it doesn't have the native tooling to be able to do the trading. So by using these bridges to some of the other ecosystems, where you can actually trade. It facilitates that. And this is a protocol that would actually enable that trading. Therefore, it's going to get some shine and some demand, most likely over, let's say the next 9 months or so, as that demand starts to pick up in liquidity and demand for these BRC tokens.
Yeah, that is more on the fundamental reasoning.
Right. But you're looking at more of the order flow.
I should focus less on fundamentals.
The TA. Okay.
But when it comes to the order flow as well, I'm bullish on it. When I look into it, when I checked out the buying on how strong it has been happening, the accumulation that has been happening, not just the technical chart, but also the order flow, I'm quite convinced that this is going to have a very good breakout and run up. So in validation for this, in case if someone is worried, this month's open price should be the invalidation. If price falls below this month's open, basically I was horribly wrong, is what I would assume as.
All right.
But
we should let him take a victory lap on Rollbit too. It's almost up 2x since he first mentioned it. So
yeah.
All right.
I stopped checking it. I'm not even checking it.
That's right. As he said, he just thinks the money's gone. He's not even going to think about it. All right. So there you have it. You have your second token that's been mentioned by Benjamin on this show. The first is Rollbit. Now we have this one. So if you're interested in doing some degen trading based on order flow books, this may be something worth considering. Again, none of this is financial advice. We can't give financial advice because we're avatars, and that is just beyond our purview. And with that, we're going to wrap up today's show. I want to thank everyone for joining us for a second show. I know it's not easy when production fails. And the gods of the internet are trying to prevent us from unleashing this alpha on everybody, but we're doing what we can. So I appreciate everyone coming back. We'll definitely be back next week, next Tuesday and Thursday. And definitely, if you're interested in getting even more of this information, stay tuned. All I can say is we've got a lot that we're working on behind the scenes. It's exciting stuff. I think Ben has tweeted out and shared some of the information with our avatars in our upcoming studio. You're not going to want to miss that. It's going to be a better experience for getting some of this information and engaging with the team. So stick around. With that, though, we're going to wrap up. I want to thank JJ and Benjamin for being here, dropping the alpha, thanking everyone for listening in. And I will leave you with the same thing I do every time. Keep some dry powder. The opportunities, they're going to be there. You're going to need some powder on hand. This is Marconi White, signing off.